Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, November 17th, 2021. I'll do a very brief update on the equity markets, and then followed by updates on some of the recently highlighted trade ideas, including at least a couple of new ones. So we're going to go in this order. We're going to look at the NASDAQ 100, Russell 2000, then updates on Bitcoin and Ethereum, coffee, new trade idea there. And soybeans, update on that. INM, that's one of the individual stocks I highlighted the other day. That one's moving. ZME, another one highlighted just the other day, along with QUBT. I'll do a brief update on the marijuana stocks. MJ, looking at the sector, gold, silver, and then some new trade ideas on treasuries and corporate bonds. All right, that's a lot to cover, so let's dive in. NASDAQ 100, just putting me to sleep, really. Again, the sell signal's intact. We're about where we were when we broke down. There was our primary trend line. There was a sell signal given. And we're right back there. So we're really where we were yesterday, so probably not even worth updating, but I know a lot of people follow the equity markets. And then on QQQ, just like the NASDAQ 100 futures I just showed you, you need to take this secondary trend line. This was the primary trend line. That was our sell signal. A little snapback rally. So break this trend line should bring us to my targets. Nothing's changed. Still leaning that way. But again, we need to get some downside momentum going in the markets. It's been kind of a slow slog and back to where we started since the breakdowns triggered last week. Russell 2000 looking a little bit better. This is a 2-hour candlestick chart. We were just looking at 60-minute charts on NQ and QQQ. You had that wedge right there, negative divergence, everything I like to see. Nice clean breakdown, sell signal the last week along with the other indexes. And then we set up, as I pointed out just the other day, we set up a secondary uptrend line right there, which I said would trigger the next sell signal. That came right there. It was our breakdown. And then right now we're flirting with this 2380-ish level. You zoom in real tight, you're going to see that that's right about this previous reaction low right here. So that's it. So we just need that little nudge to get the small caps going, because they broke 2383 and they are below it. And you could certainly make a case to short here, but at this point you had that reaction low there. If you're not already short or you're looking to add to an existing short, I think a break at today's low should do the trick. And obviously it's going to help to see the large caps also move lower, and targets remain the same. All right, let's move on. All right, let me mute the phone here. I usually do that before the video starts. Forgot today. All right, let's dive into Bitcoin and Ethereum. Did an update on Bitcoin yesterday, but I forgot to include Ethereum, and then I posted the chart under yesterday's post, which is a reminder. Ideally, I recommend coming into the site, especially if any of the videos or individual charts that I post and you get by those email updates, if you're interested in the content, any of the trade ideas that are covered in that post, I will quite often do either a follow-up post, follow-up, like I did yesterday with the chart of Ethereum, or maybe answer some questions relating to any one of those trade ideas, and sometimes other questions, other things I missed. So point being, you can click on the title of the email that comes, the title of the post, it'll take you into the site, and then check the comment section from time to time. And sometimes I'll even make an edit to a post if I made a typo or anything going out. So I always recommend coming into the site and checking the post and then following up and subscribing to any posts that you're interested. Subscribing to the comments. I'll show you how to do that in 1 second. Let's start out here with Bitcoin. Bitcoin, nothing changed since yesterday. We had this nice clean, we had a sell signal back here, divergent high, wedge breakdown, and a lot like the equity markets in many cases, it pushed on, made a marginal new high at that point, and that marginal new high only extended the existing divergences. So this one was pointed out to you last week as a potential short trade idea. It went on to trigger the sell signal that I highlighted in that video, laid out. 64,379 was price support plus the intersecting trend line, and that was it. We broke down, back tested, And again, I did an update yesterday. We went down to hit what was my minimum preferred target, 58,315. We hit it yesterday. We hit it again a couple times, and that just only helps to validate that support level. I believe I mentioned you could make a case for an objective short on a bounce back to the 6,800 level right there, and you've had that opportunity. So basically, the next sell signal or objective short entry is going to come on the break of the recent lows, which again is about that 58,313 level right there, and that should take us to that potential third target there. And again, I covered this one yesterday, so I'm not going to go into detail. The case has been made that when Bitcoin does top, and whether this is just a correction or a tradable top, that the corrections usually range, up there, 50 to even 80% is the nature of this beast once it tops. So again, if we break that, it's just going to add to the bearish case, and we could certainly do more than that. That's just my next target. So up to you if you want to, swing for the fences. And what you do if you short it up in here, keep your stops appropriate and just ride it down. If it gets way down here, then you obviously want to lower your stops, periodically ratchet them down, and hold out for what could prove to be a runner trade, or just take the quick buck and get out. That's up to you. That's swing trading versus trend trading. I wear both hats, and I'll do a little both. There's Bitcoin on the 60-minute chart. GBTC, I'm going to raise this level. These are old targets before, old resistance levels right there. This is the line. I'll color it up for you. If you are swinging down for using GBTC as your proxy, you have a couple reactions there and a big old gap right there, and that's 41.43, so cover a little bit above that. And what I'll do is drag this line down now to the recent lows right there. So there's your support level. You need to break that, and if so, you get a drop from where we're at about another 13%, so maybe under the break of that line another 10% or so to the next target, where you'd probably get a buyer stepping in. So active traders could either cover a position there, even reverse long, or again, if you want to just hold out and for the bigger drop, if we're going to get it, case can be made on this chart, with these pretty much right now what we have in place is a potential triple top high, and swing it down there. That's your first target support zone, and then I'll update it along the way. But what I didn't do yesterday in the original video is update Bitcoin. I'm sorry, not Bitcoin. That was Bitcoin. Ethereum. Okay, so here it is. Swing trade ideas. Yesterday's video. And then right afterwards, I remember I meant to include Ethereum. So here's the chart, and here's my notes. Looking good. Again, these guys are going to move together. Birds of a feather flock together. If you're long and bullish one gold mining stock, you might as well be long and bullish the rest, because the group tends to move together. Same with these cryptos, especially the big ones. Ethereum and Bitcoin are your big boys there. And I told you I preferred ETHE instead of ETCG this time around. I had a cleaner chart, and that was the update yesterday. It was down another 9.5% following the breakdown that we had on Monday, the wedge break, and so my targets remain as previously marked. I also gave you an update, or somebody asked for an update on XBI in that post if you're interested. Again, that wasn't covered in the video, but I figured I'd give an update there because I haven't covered the biotechs in a while, so there's some levels to watch there. And then that ETHE, here's what it looks like. There was that nice clean up trend line, rising wedge, negative divergence. Last time around we had a similar pattern, was right here. We were wedging up, had a trend line break after a divergent high, and this is what happened to Ethereum. That was a drop of, I gotta go over here to start the measuring. Before all is said and done, the thing fell 64%. So again, we have a comparable, similar pattern. In addition to Bitcoin, which has failed, the triple top failure so far, what we have is even better here, almost a false breakdown. We broke out of that previous reaction high right there, and then failed the breakout recently. So that helps to build the case for much more downside. And you guys already have my targets: 1, 2, 3, 4, 35, 36, 31, 50, 26, 60, and then the uptrend line right there. And another, example of coming in and checking the comment section. On the November 12th cannabis stock swing trade idea video, somebody asked about coffee. And you guys know me. I love commodities. I've been trading for years, long, short. You know, if it has a ticker and you can chart it, I'll trade it. I don't care if it's crypto. I don't care if I don't understand or believe in the fundamentals or long-term of crypto. If it's bullish, I buy it. If it's bearish, I short it. Same with commodities or just about anything else out there. So somebody asked about coffee, and since I often cover coffee and we've traded it quite a bit over the years, and all the commodities out there, we've had. This is one of the probably the best track record on some big calls I've made over the years in coffee. Trades well, and I've kind of backed off it recently. It's been in a strong uptrend, but it's the kind of uptrend that I just don't chase. And I have given a couple other people have asked updates, and I didn't have much of an opinion until now. So anyways, somebody asked about coffee, and it's been running lately, and my answer was that Joe, the coffee ETN, is wedging higher with negative divergences while still within an uptrend, at least for now. And so while it's also approaching my long-term target laid out back in 2019. So that was what well over 3 years ago. Laid out a target 2.5 years ago. I'm sorry. Laid out 3 long-term targets. I'm going to show you those right here. Here, let's just dive into that chart. So this again was from the other day. There's Joe wedging higher, the coffee ETN, negative divergences. Right there. It's up a little more today since I did this, but there's your uptrend line. Pretty clean uptrend line in which to trigger a short. And so that's what I'm pointing out coffee now as a short setup. Or you may even want to start scaling in today because we're at resistance. This chart was posted back on, this is the most recent one. Let's see. Yep, this I posted the other day under that video. Coffee is getting close to my 228-ish. Yeah, I have a target. It's about 230 actually. Looking at the line, 228, 230, give or take. Again, this one was posted originally back here. It was bullish, and it turned out to be the bottom, and it was a heck of a call. Posted coffee as a setup, a long setup right here in this bullish falling wedge. We had confirming charts on the 60-minute time frame and everything else. And I laid out at the time 3 targets listing a 60%, 90%, and 160% gain potential for that trade. And boom, that first one hit to the button, that 60% back in late 2019. We had caught that initial rip and mentioned, taking profits or going short. It pulled back, but it put in a higher low. And just like so many other commodities, this seems to be early stage bull market action. But again, let me show you the original chart from back then. So this one was dated back in May 8th of 2019. There's that wedge right there. And there's the 3 targets. Said, any of these, this is the actual chart. And that's that 230-ish level right there. That was my maximum target. I didn't calculate the percentage gain, but you can see the arrows there. And that's it. Now, okay, why am I harping on this? Because here we are. That's it. We're at that. Let me pull up that chart for you right now. This is end of day chart. It's that same chart from back then. My weekly chart of the coffee futures. And today coffee hit a high of about 230, a little over 230. Remember, so end of day chart, so this will reflect a candlestick right at that level. And I often say the initial tag, especially my final targets, those usually result in not just a reaction or a pullback, but usually a trend reversal. That would be, and could be, at least for the time being, the end of the run. That's a major reaction high right there. And I wouldn't short it just based on that alone. There's some other confirming factors I'll get to in the charts in a second here. So to me, it's worth a shot as an aggressive trader, because I know a lot of you, I know what you're thinking. Well, coffee is one of the most bullish commodities out there right now. It's just going straight up. It's in a strong uptrend, a very, very strong uptrend. And I've talked about that before. We've caught a lot of these rips in the past. Coffee, I love trading it. It's kind of like natural gas. When it wants to run, it really runs, and it defies overbought. And on the downside, it defies oversold. So you really have to be careful. And the thing is, look, if you're going to take the aggressive trade, the aggressive entry, short it here. With a stop somewhat above. It might want to briefly pop that level, but don't give it too much room, because just again, don't underestimate how overbought it can go. Here, I'll show you that. Here's the overbought readings down on the chart. Let's look at the RSI down below. There's an extreme overbought. We're not nearly that overbought. We're just slightly overbought. There's an extreme and persistent overbought. It started getting overbought here back in early spring of 2010, and it stayed overbought for a year in that overbought range. So again, that's all I'm trying to say is, yeah, has it had a heck of a run? And yeah, is it probably going to pull back? That's usually the case when something gets that overbought. And remember, we've been at overbought readings now for months on coffee. So that's all. And let me show you now the chart to help time that trade. And that would be KC or coffee futures. Coffee futures are one way to go. That's my proxy, or my favorite trading proxy for coffee. And you can see we're right here. We're wedging higher on the 60-minute time frame I'm showing you. Nice little uptrend line, bullish bearish rising wedge pattern, negative divergences. They're not confirmed because that PPO, I need to see a cross down and then to effectively put in a lower high right there. But I expect it to happen. So I think you can take a shot now at coffee. It's objective again because you're at long-term resistance, and then your next sell signal, if you want to take a half position here, add on a break of this 60-minute downtrend line. And I expect there's a lot of hot air in coffee. I think the longs will run for the exits really quick, and you'll probably see some shorts pile in. So I think you could easily make here. Let me give you targets. I'm sure you want targets if you're just looking for a quick pullback trade. 223.50-ish. And then I think we'll probably settle back down somewhere around here, about 215 right there. And that would give us a drop of 5% to that first target, and if I measure down here, about 8% or so to the second target. But remember, if that's a significant top in coffee, I don't think the bull market's over. I believe we've embarked on a new bull market in commodities, a multi-year bull market that's very early in its early stages. There'll certainly be corrections along the way, and if you trade commodities such as natural gas and crude oil and coffee, those corrections are going to measure well into the double digits. So just keep that in mind if you're trying to trend trade those. You might want to kind of, to an extent, micromanage those positions when it's clear and the charts are just glaring, screaming, correction likely. You might want to then either reduce that position in that particular commodity, or just step aside and then buy it back at lower levels for the next leg up. A lot like we did with gold, when it peaked a year or so ago. And then some other targets. I'll continue to update this. We don't even have the sell signal yet. I just wanted to point out is really liking that. Another commodity that I've been highlighting for you recently was soybeans, and that one had a nice run today. Let me show you that, and that is ZS. If I can find it down here in all my symbols. There it is, ZS. All right, so here's the 60-minute chart. You had a nice clean downtrend line, which was broken out, gave us a buy signal here the other day. So the buy signal was triggered, and now today we took out that first target. We hit and then took out the first target of 1266.5 right there, and that was pretty nice resistance. So that's bullish. It's a little stretched. May want to come back and back test that level, but we'll probably continue to work our way up here to that next target and maybe more. 13.12 and a quarter. And for you ETN traders, you have SOYB. It's your soybean ETF. And there's the breakout. So we broke out the other day, as I told you, on the downtrend line. And that was your breakout candle on Monday right there. And then I said we had 21.96 as resistance above it. Just under the 22 level. We hit a high of 21.94 yesterday. We had the previous day we hit a high of 21.93. Close enough for government work. Boom, 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 and then boom, popped it. And it's not coincidence that they popped resistance, and you can see the buyer stepped in. And at one point today, we're up quite a bit. So, this is not an explosive commodity like natural gas and coffee, but it's decent gain, 2.5 so far. Targets still remain 2273-ish, so a little bit below 2270, I think, and if that's your preferred target, and then 2350. Okay, next up, is INM, InMed Pharmaceuticals. I mentioned that one right here the other day. Didn't have a very clear trend line, but I told you it had some nice bullish divergence here. Low price stock. These are the kind of things that are running lately when whether it's the Reddit group or just traders in general get a hold of them, especially when they have a high short interest. I believe this one's heavily shorted because my interactive brokers platform has a dark green bar. There's a setting you can do on any positions that you have, and it'll show you if it's light green, they have plenty of shares available to short. If it's dark green, they don't have any at the time. They may get some, and if it's red, means forget about it. There's no shares out there at all, and won't be anytime soon. Anyways, this one's dark green, so there's probably a short squeeze going on today, and that's taken it above the levels, both the downtrend line. It's up 47% right now. So if you took a starter position the other day, I think you can add to it today if we look like it's struggling with that level. It's just above it. I had a price resistance at 202. We had a major reaction high here, plus some resistance support back here. We're above it right now, so you can make the case to add to that, take it to a full position if you want. But if the breakout fails, then that's where you may want to stop out, or at least on the half position. So if you took it here the other day where I threw it out, you're up over 50%. That part of it you could definitely allow for a little bit more of a pullback. But volume's real nice on this right now, and these are the kind of stocks that run. So I'm still maintaining that second target. First target's hit. If that was your first target, the trend line 202. 261 is the next target. And sometimes with these, this is just what's happened lately. This market's full of froth and speculation. These things can really explode. Maximum, I think I'll give you a max target if it happens to go crazy. I don't know if this one will or not. I really didn't even bother to check if there's news. To me, I trade mainly off the charts. There's probably some news catalyst, my guess, on a 50% move, but sometimes it's just the maybe the Reddit crowd found this one. Either way, that would be a potential move. What I was going to say is when you get in these, and if you're in it from the other day or you're in it now, just let it, if it runs, just ratchet your stops up. Let it run. Don't underestimate how much this or any of these smaller low price stocks can go. So right now, like I said, from where it was highlighted through the high of the day, it was up about 70%. If it hits that max target, it would be about a 185% gain. That's INM. And then another one, ZME. This one was also pointed out the other day in the Trade Idea video, and it's poised to run right now. It's at the downtrend line. I showed you this one it's a relatively new company. Went public back here, low priced, but nice, strong, bullish divergences, and a big green bullish engulfing candle so far today. It intraday popped just like it did the other day right here with that candle. It popped above the trend line, but we're right on it right now. Okay, so the story on this one, technically it hasn't triggered a buy. It did. If you took the breakout, fine. You're still right there right now. But what it needs to do is follow through at this point and close. I want to see a solid close above the trend line. So it's trading right now at 179, and effectively it's on the trend line when you zoom in. So pretty much a close. If we can close up near or above today's highs, or even rally back up and run out and challenge those highs today, that should do the trick. So here we are. This is what I want to see, and on this one, I'll add to that if it starts to move up here and run at those highs today, especially if it looks like it's going to close above there. But again, beta adjust that position size down. This is a high risk, speculative or aggressive trade. Not speculative, but aggressive is what I'd call it. Won't spend much time in gold and silver because I updated those yesterday, and I update these nearly every day. There was that little 60-minute divergence and the trend line break and the impulsive drop. But look, impulsive buying today to get us right back to where it broke down. So this is what I like to see. It shows me that they're buying the dips even despite what is normally pretty bearish technical, is a bearish rising wedge. Now it could still have another leg down and get there, so nothing's changed. I think it still is a buy if it happens to come back down to 1838-ish or even a little bit below, not too far, all the way down to about 1800. And really don't want to see it go much below. If they just gobble it up here and take it and run, that tells you there's a strong bid for gold. And I already shared my thoughts recently that if you're not an active trader, just hold tight. There's nothing overwhelmingly bearish, and nothing but bullish price action really for the last few weeks, other than that little breakdown yesterday, which I said maybe near term might give you some weakness in gold. So that's it. Looking good so far. The fact they're gobbling it up. So if they can just continue to run it up, all the better. Silver, same thing. Actually, silver, I might have tweaked this trend line, guys. I can't remember where I had it before. I do remember adjusting this. And I do that all the time. I always say the charts are dynamic, and so is my analysis. So I might have a price level, trend line, and if I think it needs to be adjusted, which I did recently, because here's the initial reaction, then you had this pullback, that reaction right there, and so that's it. We're right on the trend line right now here. I know the video is sometimes hard to see, so I'll zoom in real tight. You can see that. All right, so there's a trend line, and so that's it. So silver's actually above trend, and more importantly, holding on to that 24,867 support. Again, no bueno, at least in the near term. If it breaks that support right there, it's probably going to pull back. There's some minor support right here, bigger support down around here, $24. But as of now, this thing's in an uptrend. PPO's turning up, and still like in those intermediate and longer term. Just near term might be a little rocky. Who knows? And last but not least, might be another bounce trade in bonds. I've kind of been in hit and run mode in the bond trade recently. Focus on anywhere from 5 to 30-year bonds and anywhere in between. This is the 30-year, the long-term bond, 20 to 30-year bonds, and TLT. Potential uptrend line. So I'm looking at for a likely bounce here. And it doesn't show. I'm going to just show you. Let me show you the futures. If you want to trade the ETFs, TLT is your long bond, the 30-year, pretty much. IEF's your 10-year, and then you have SH is short term. Let me show you the futures, because that's where the professionals are trading. A lot of bond traders are. You have a lot less retail traders trading bonds than you do professionals. ZB, okay. ZB, this is the long bond, 30-year Treasury bond futures. These are lines I've had here for quite a while, about 159, 240. Maybe that line should be lowered just a bit. That's where I had it before, and I'm going to do that now. I'm going to lower it down here. Why did I do that? 159, 184, because we have 3 distinct reactions recently, right there, there, and now there. We had another one in there, some more in there. And also, when you look at ZB, not only do you have that, you have nice little positive divergence here on the 60-minute chart, and you just check that extreme oversold level. I always say I look at each security differently. You know, charting programs are going to give you a default line at 30 for oversold, but that doesn't mean anything on ZB because it hits 30 and goes through it all the time. So what's pretty much the extreme? It's about 2160 right there. You can see there. That's where, you know, if you're going to just simply use that, I don't buy only because something's oversold, but that's about as deeply oversold as it gets. And again, if you stepped in and bought there, or on the subsequent low that gave you positive divergence, you made money. And this is bond trading. This is swing trading. In, out. Wash, rinse, repeat. You know, I've posted bonds as long and trade setups numerous times just in the past few months. And I think they've all played out, or at least the majority, including this divergent low, this one. There was a divergent high into resistance. So that's that, guys. Targets, I'm going to move this line up a little bit. You've got about 160, 226 if you want to take a quick bounce. Let me put those divergence lines in permanently. And after that, let's just leave that line there, 161, 236. I'm kind of more apt to just get a quick hit and run trade out of this, so for what it's worth, because I'm not crazy about what I'm seeing on the daily charts. But that's ZB. I also like ZN right now, and ZF. ZN is the 10-year Treasury bond futures. You had that beautiful bullish falling wedge right there, breakout, rallied up, hit my 131, 258 target, hit it not once but twice, gave you 2 chances to get out, pulled back, and we're back to the bottom. So there's a double bottom, or at least we're at that previous reaction low, which is support, and nice, clean, big, sharp divergences on this 60-minute chart. So again, a bounce trade, minimum target, just want to get in and get out, you know, take a contract, whatever your number is. One person's contract is, size is 1 contract. Some people might trade 10 contracts, but even a single contract, a move like that, you're making enough money to certainly buy a night's dinner or two. And that would be your second target. I think we can probably bounce up at least to that 131.077. So call it 131-ish. on ZN. And if you want to go shorter duration, just remember that typically the longer the duration in the bond, the longer the maturity, the more it's going to move, more sensitive they are to changes in interest rates. And this is our 5-year treasury, so lower risk, lower return potential, but look at the nice divergences again. I pointed this one out back here, that divergent low. You got that nice rally up into that 122, 144 target. You put in a divergent high that said, hey, you know what? You might want to take profits at that target because you had negative divergences, and it played out. And what happened? We put in a marginal new low. We slightly undercut the previous lows, but we did so with bullish divergence. And I think this one also offers an objective long entry here. And minimum target, I mean, that's just, you'll probably blow past that. So first resistance would be that reaction high about 121, 211. And but I think we can come back up here to that 122 ish level once again. And so that would be, you know, in the about a 0.5% move. But again, I don't have to tell you, if you trade futures, these bond futures are pretty highly leveraged, so you know it's worth your while if you're just going to get that quick buck. And if you want to go for more, 122, 144 is certainly possible as well. And then the other bonds I like, and this one I don't believe there's any type of futures for it because it's not a single bond, it's a bond fund, is LQD, and that's a corporate bond ETF. So what happened is, you know, bonds got, you know, beat up pretty bad lately. You know, recently we came out with the hottest CPI numbers in 31 years, so inflation. They're finally, you know, those in denial are finally starting to admit, oh yeah, we got inflation. But you hear the same story from the White House and from Powell and the Fed. Transitory. They've been, I don't know how much longer they're going to keep that up, but either way, doesn't matter. What matters is what the market thinks and reacts. So anyways, they did sell off the corporate bonds, but look where we're at. We came right back down. There's a support line I've had here for quite a while, about 131.72. It was a zone back here, and it's more importantly, you have 1, 2, 3 reactions there. So there's support right there, positive divergence here on the daily time frame. Thing about this is you got to take a lot of it to make it worth your while, because this is not leverage, and I don't know if there is a leverage corporate bond fund ETF out there. Max bounce target I'll be looking at, well, minimum, let's say 1.66%. So really not going to get you rich unless you put a lot of money in there, and you can do that. It's just going to burn up some of your quite a bit of your buying power in your account. About 3% would be your maximum bounce target, and that is back to the downtrend line right here. We have a primary downtrend. Bonds, you guys know I'm longer term bearish, and that's it. They've been moving price-wise lower and lower because we're looking at you know, in an inflationary environment, or maybe even worse, stagflation, and people are losing value in bonds. Bond funds are probably the worst investment for the next 5 years, 10 years out there right now, because interest rates have nowhere to go but up. Means the value of the bonds are going to go down. So these bond fund holders, whether it's in their 401k or ETFs, they're collecting paltry interest of a couple percentage points, a few percentage points, but yet they're losing principal. You know, if you bought LQD back here and held it at that peak back there in last July or August, the fund has dropped, the value of it's dropped almost 6%, and I'm pretty sure you didn't earn 6% interest or dividends on that fund at that point in time. So you're going backwards on bond funds longer term. And but again, this is just a tactical trade, so you can step in and buy it there if you want. Yeah, I was going to stop the video, but you know what? I missed a couple. I was going to update that QUBT. The breakout still intact. I just want to say it's down today, 7.95, almost 8%. Tried to take out where it closed yesterday. Again, breakouts still intact. Volume's still decent. So you might want to give that one some room. The marijuana stocks, remember the other morning they were up and they didn't follow through that day. I did the update pre-market, said they need to follow through. So no follow through so far on the breakouts. And again, some haven't yet broken out. When you look at it this way, you know, I wouldn't write it off. If you have a starter position, this is my plan, hold tight for now, because you do have a breakout. And so far just a correction, but I'm not seeing the usual strong buyers, you know, buying power or buying pressure, excuse me, coming into these guys right now. So I would hold tight before adding. That's what I'm doing. I want to see, I need to see more evidence. So far these guys popped, The breakouts, some of them had nice clean breakouts, but guess what? There were no follow-through buyers. That's what you want to see on a breakout. That's how technical analysis works. That's why I like to see above average volume on a breakout. I like to see a next wave of buyers come in, especially after a pullback. So, you know, I wouldn't give them too much room. If these breakouts fail, we could be heading lower. And like anything else, you know, if you're in them, maybe a little more rope. We'll see how they develop over the next couple days. I'll update that. And then finally, I wanted to update. I don't think I mentioned in the beginning of the video. Just wanted to say I still like crude oil. It's just taking its own sweet time to roll over. A lot like the equity markets. You know, I've got sell signals on crude as well. There was my divergent high right there. Negative divergence. It actually goes back a ways. And then we broke down, beautiful breakdown, beautiful back test, rejection, another back test, another rejection, and this is it. We keep bouncing. I have updated these lines because the futures rolled. I'm now working off the January contract, and that's it. We need to break this roughly 77.80-ish level right there, and I think we will, and then it should be a move down to about 74.60. Again, these may or may not align with the targets I had previously because it's a new contract and I had to redo the lines, and then quite likely down here 73, 72.27. Those are just near-term targets, and certainly the potential for a lot more downside in crude. I think a case could be made, as I have in recent weeks and months, for a major top. We need to fail the recent breakout, and again, I'll cover that. If we get this next sell signal, I'll continue to do updates on crude. I'm going to wrap it up here. Today's Wednesday. I'll be here throughout the rest of the week, but I do want to mention I'm going to be traveling out of the country next week, all of next week, and I don't know what kind of internet access I'll have and what we'll be doing, going down to St. Lucia for a wedding, and we're going to spend a week down there. So just want to mention, and I'll remind you again, I'll be here through the end of the week and out of all of next week. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.